What's up, guys? Welcome back to the new channel. In this one, we're going to be going over a bunch of different dividend stocks, Theta Gang, helping you make the most out of money with your stocks by selling options, collecting premiums, collecting dividend income, making a passive income portfolio that provides you with cash and income on a monthly, weekly, daily basis, whatever you want. We're going to make sure you can get everything. I'm going to teach you everything about the market in here, helping you guys make the best amount of passive income that you can through the market with stocks, options, everything just like I said. So please do not forget to subscribe and turn on post notifications for daily videos. If you like dividends and passive income, then this account is for you. So let's get into this video. In this one, we're going over 3 dividend growth stocks that I continue to buy on a weekly, monthly basis whenever I can, because I believe in these companies and their dividends are just too good to avoid, okay? The first one is going to be Home Depot, ticker HD. I'm sure you know what Home Depot is. It's that company that has the orange logo that you always see, and they sell home goods. They sell things like furniture if you need it, like washing machines, wood, whatever you need at your house. It is the Home Depot. It's where you go for home improvement. And with everybody working from home now, people want to be at home. People want to build that cool home office so they can work from home and do whatever they want, because everybody with COVID is starting to work from their houses instead of coming into the office. And now people have to go to Home Depot to buy all this stuff. And Home Depot had a great year this year. Looking at their stock, they're up 2.23% on Friday, and they're up 61% this past year. And over the past 5 years, they're up 132%. We did take a little bit of a dip whenever Corona came in. We were at 245 all the way down to 152, but you could have bought that dip and you would be back up at 303, almost doubling your money, which is insane. We can see they have a dividend yield of 1.97%. If we look at some stuff on Seeking Alpha, they have a dividend rate of $6.60 per year, and they have a PE ratio of 23.82 with earnings per share of $12.76 per share. Let's look into some on their dividend scorecard, and we can see they have a 5-year growth rate of 20%. So every single year, you're getting a 20% raise on your dividends with a payout ratio of 51%, meaning they only pay out 51% of their net income to their shareholders, which is a great number. That means they have room to grow and also room to reinvest back in the company. Let's look into some financials on them. They have $100 billion in revenue almost every single year, okay? Ever since 2018, $100 billion to 108, consistently growing these revenues. And we can see in 2020 and 2021, these revenues were incredible, okay? Their profits are increasing, and these are just great numbers. An incredible income statement. Their balance sheet is also pretty good compared to assets to liabilities. Not that 2-to-1 ratio that we like to see, but it is better than nothing. They have a lot of debt, but they're making so much money, it's not that much to worry about. They are a bigger company, so they can take on this debt. And the second stock we're going to be looking at is Apple. I'm sure you know what they do. They sell those smartphones, they sell the laptops, they sell the Apple Watches. This company is a huge tech giant, the biggest company on the market right now, with a market cap of $2.07 trillion and a dividend yield of 0.68%. You might be like, why do you like this dividend company? They have a low dividend yields, only 0.68%. Well, to be honest, Apple is a dividend growth stock, okay? These are 3 dividend growth stocks, not high yielding stocks. I'll make another video in the future, so make sure you subscribe for videos like this where I can talk about high dividend stocks. You guys can make a video and I can go and analyze any dividend stock you want me to do, any options strategy. So I'm going to help you guys make the best gains in the market. Apple is up 91% this past year, up $57.92. In the past 5 years, they're up $94, 356%. They did have that stock split going from a 4 to 1. But what we do see is their volume is pretty high. They are a very high volume trading company. Their dividends, we can see their earnings per share is $4.39 per share, but they only pay out 82 cents per share, leaving them with a very low yield. Let's look at their dividend scorecard. They have an annual payout of 82 cents per year, a payout ratio of 18%. That is so low. They only pay out 18% of their net income to shareholders. That is so much room to increase this revenue and to increase their payments to shareholders, which in the future they will continue to do. But they're using most of their net income to reinvest into their company, which is a great thing to see. They have a 5-year growth rate of 9.54%. Sorry about the little stutter there. But they have a 5-year growth rate where you are getting a 9.54% raise on your dividends every single year, which is a great thing, and a dividend growth streak of 8 years. That is awesome to see. And their net income and gross profits are insane. Okay, total revenue of $274 billion in the past year. That is incredible numbers. Their profits are increasing every single year, except for 2018 and 2019. There's a little bit of a bump there, but that's okay because Apple is making still incredible profits and incredible stuff to see. And the third and last company that we're going to be looking at is Broadcom, ticker ABGO. And this is pretty much a global company, and they design, develop, and supply semiconductors. They're like software for phones and stuff. They have a dividend yield of 2.77%, which is the highest one we're looking at, with a market cap of $197.82 billion. Over the past year, we are up 106%, which is incredible. We used to trade about $237 per share, and over the past 5 years, we're up 213%, okay? These are incredible gains that we're making. and Broadcom is a great dividend growth company, the biggest one that I believe. We can see they have a dividend rate of $14.40 per share because they are an expensive stock. I would not be surprised if we see a stock split coming in the near future for Broadcom. And they also have a earnings per share of $26.84 per share. That is just like unheard of. And we can see right here a 5-year growth rate of 50.92%. That is incredible numbers, okay? Every single year, your dividends are being raised by 50%. Now, your dividend yield is almost 3% with a dividend growth record of 10 years, okay? A payout ratio of only 53.65%, which is very low on the good end, meaning they have room to continue to reinvest in their company, give you them quarterly dividends, and help you make the most amount of passive income that you can, okay? And lastly, we're going to look at their income real quick. Their income statement is pretty nice. Consistent revenues are increasing, profits are increasing. This is a great company in my opinion. I love to see everything on their income statement. If we look at their balance sheet, a good asset to liability ratio. It used to be that 2-to-1 ratio, and then they start taking on some more liabilities, but hey, it looks like they're doing good with it, so it's a great thing to see. So make sure to not forget to subscribe and turn on post notifications for daily videos. You guys have done so much for me on Stocks Wallet, and I'm excited to start off this new channel. I might be doing a little portfolio challenge where I put in some money and just invest it straight into dividend stocks and sell cash secured puts and covered calls on all these stocks. And I'll teach you guys and I'll take you through the journey. So please make sure to subscribe and turn on post notifications for daily videos just like this. And don't forget to comment down below what you think of these stocks. And I'll see you at the next video tomorrow.